All right, good afternoon, everybody. Gavin McGuire, event trader here, and being joined for the Options PlayBook by none other than, of course, Options trader himself, Brandon Mars. So, Brandon, how are you doing today?
Other than a little headline whiplash, doing pretty well. How about you?
Yeah, pretty much the same. I just got back from Key West. I don't know if you've ever been there, but I would think that that would be something right up your alley. But it's just kind of interesting to see get on a plane, market's down 2%, get off a plane, market's up 2%. all based around tariff headlines, right? So definitely it's been interesting to kind of watch that backdrop. It's made for tricky trading to say the least when you got this sort of headline minefield out here. So I guess that would be the first question that I'll kind of throw your way. How do you trade in an environment like this with your options trading? I mean, does that cause you? I mean, I'm assuming you probably go smaller size, things along those lines. But does that have you looking maybe a little bit more out of the money than you normally would, just because of the volatility or anything along those lines?
Yeah, I would agree with you on out of the money. I mean, just generally speaking, well, actually, let me back up. I mean, when you're out of the money and we're getting these choppy periods, that's obviously the exact opposite of what you want when you're out of the money. But if you're out of the money and we do get that nice headline that I don't know, whatever country we're going to throw 100% tariffs on, and you get that big quick drop, I mean, that's the ideal time to be out of the money. So kind of a little bit of a mentality right now of like, I got to be careful that my premiums don't get eaten up in chop, but at the same time knowing that there's probably a good chance that there's a headline coming this afternoon and there's probably
Right.
another one coming this morning. So if you're kind of taking that gamble on the options, I would, yeah, I kind of am leaning more towards out of the money aspect to it.
Yeah, and just again as a reminder for everybody out there on those afternoon headlines, we are expecting Xi and Trump to speak. It is what about 2:30 p.m. or 2:30 a.m. right now in Beijing. So I don't know if they're going to be talking for another couple hours, probably till after the market closes, would be my assumption. But we'll be tracking those as we're talking with Brandon and throughout the afternoon, of course. So, Brandon, let's talk first a little bit about the markets. And we talked about the read the headline choppiness. What I want you to do is, and I got the daily up for the S&P futures here. You can pick whichever index you want to go off of, but just talking for broad market price action. I want your interpretation of some of the daily bars that we're seeing out there, and kind of where that has you leaning overall for trend.
Yeah, so overall, I'm kind of going maybe a little against my rules here and in putting my personal thoughts into the markets outside of the charts. I'm not feeling very bullish right now. I can make the case. We've had the days where things are strong. There are pockets out there in my watch lists where you're seeing the animal spirits, but I just don't think some of this back and forth on tariffs is going to be good for us long term. I just don't, and I'm sure that there are plenty that disagree, but I think it's really going to get in the way of business planning. I think it's going to whipsaw kind of some of the mom and pop long term investors a little bit. So I don't know. I just don't think it's beneficial. So with that said, I'm kind of leaning towards the bearish side because, I just feel like there's more risk on the headlines to the downside right now. If you look at Canada and Mexico, we got a 30-day pause. I don't expect an agreement to be reached tomorrow. I would think that would maybe be a couple of weeks down the road, if anything at all. So I feel like that the headline right now is more to the downside of, Trump's upset that China put 15% on us, so now we're going to 30 and the tit for tat. But to your root question there, yeah, a lot of wicks there at the bottom. I'm on the S&P futures as well on my chart in front of me, and yeah, I mean, just what in the last 6, 7 trading sessions, you got three really long wicks at the bottom of the candles. So, I'm kind of seeing that as obviously some buyers stepping in trying to protect that area. But, in this case, I see that actually as quite vulnerable if we start to test those because it just feels like those were pushed up by algorithms off of headlines. So, they're fresh longs. They might not be, they might be weaker longs in certain cases. And I think if we kind of start eating some of those tails, it will really start to make us roll over.
Yeah, and it's interesting because with the VIX elevated so much, it's tough to see both the S&P and VIX going up, I would think, right? Just in terms of trying to find new all-time highs and things of the like. So, what would be a pattern that you could see? I mean, you could argue that we have something of a double top forming, assuming we can't get through the 50-day moving average, right? We got up to 61.78 back in December, on December 6th. We got up to 61.62 back on the 24th of January. So, what's a pattern that would, kind of reinforce your idea that you think we could see maybe a bit more of a correction or further downside?
Yeah, I mean, like you said, you kind of got that double top, and you've got it on the Dow futures too. So again, trying to catch itself yesterday to not make that pattern to come to fruition. But again, if that big long tail from yesterday gets eaten, could make it go a little lower. I actually entered into the week thinking that on the NQs that it was looking a little like a bear flag to me. You had the deep seek sell off and you had a little bit of a bounce, felt a little bit like a bear flag to me. So, yeah, I mean, those are kind of all the things that I'm watching. It's like, all right, here we go. We're going to break this pattern. And then I step away for half a second to get my coffee. And I'm like, oh, wait, no, we're going to break out now. So, I guess just patience and not loading up and kind of locking in some of those profits on a out of the money call or put option when you do hit the trade.
Yeah. All right. Yeah. Just kind of keep that in mind. So, again, going back to overall trend, then, Brandon, I know you'd like to talk about that you like to either lean calls or puts in one direction and just kind of concentrate on that. From what I'm hearing you say, you're not necessarily leaning on the put side, given some of the defenses that we've seen and the buy the dip action that we've seen. But you are waffling a little bit more towards that. Would that be accurate?
That would be accurate. Yeah, again, I just think that there's more downside headline risk at the moment. So that's just kind of how I'm leaning right now.
Okay. All right. Anything else on the broader markets that you want to talk about?
I guess just hang in there with the headlines for any for any new traders. Going to be plenty of opportunities out there, but patience is key, and don't bet the farm on anything right now.
Sounds like sage advice. Sage advice.
I'll save that for the Super Bowl.
Who are you betting on?
You know what? I might not make any friends on the audio or chat room right now, but I despise both those teams, so I just
Yeah.
don't have a gut feeling right now.
Of course, coming from a Patriots fan, you know about people despising your team, I suppose.
I just love to be hated.
It is good to be the villain. I was with Kansas City people all weekend long, so there's a lot of discussions about refs and stuff like that. Let's just put it that way on my side. All right,
Oh,
let's break into some of these stocks here, then, Brandon. That we're discussing Tesla. This is one that you could certainly see a little bit of descending triangle form and maybe the start of a head and shoulders, perhaps. What are you thinking for Tesla?
yeah, so Tesla actually, I was actually looking at it intraday, and that's kind of why I wanted to talk about it. It was, I'm on the
You
five
what
minute
chart you
chart.
on? Five. Okay, I got
Yeah,
you
it
there.
was kind of changed a little bit since I gave you the ticker. it was starting to form a descending triangle, and you
Yeah, I
could
see
see
it.
kind of from where we started talking, it kind of
Yeah.
stopped doing that. But
For anybody asking, this is about where Brandon and I thought Tesla was making an interesting descended triangle. So
but
I suppose that's a microcosm of the broader market, right, Brandon? Every time you think you see that descending triangle coming in, you get a move like this.
Yeah, I mean, or, like a lot of the triangles, and we've talked about this many times, you get head fakes, very common, especially when you get a name like a Tesla that's just one, a big tack, and, two, just got a lot of things going on underneath the surface. But, that little move since we started talking, that's a potential head fake in my opinion, and those are the types of things I like to look for. So, I'm looking at the like the candle at what was it, 125. You can see it there. You got that nice shooting star candle. So I mean, those are kind of some of the things that I look for. You've got a potential technical setup, you've got the head fake, and then you've got that shooting star candle at 125, and it's starting to roll back over. So
Yeah.
um the 382 area is kind of where I'm watching for here. And, I think if it broke down below that, yeah, I think it could have a chance to go down and kind of test the lower Bollinger Band, which is on the daily, that is, which is like the 378 area. So, um, and again, it's been kind of weak actually.
Let me ask you, obviously, February 3rd, 374 was the lows. And you go back to January 2nd, 373. So 373 is the year to date lows, right? So that would factor into you thinking if that broke, I'm assuming.
Yeah, absolutely. And on the daily chart, I could maybe make the argument that it was starting to look like the double bottom, but for me, looks a little different here in the Thinkorswim charts. Maybe mine's just spread out a little bit more or whatever, but it was kind of starting to look like a little bit of an inverted cup and handle pattern going back to mid-December. So, you kind of had that downtrend through the end of the year, a little consolidation, and you kind of get that little bit of a rounded formation. And the last couple days of just kind of consolidation and starting to test those lows, as you mentioned, that yeah, that's kind of the area I would look for it to break to kind of go back and test some of that support levels from November.
Let's throw out some theoreticals then. What would be if we need a single to win the game? What would be your play here? And if we needed a home run to win the game, what would be your play here? So kind of the safe play and the going for it play, I suppose, in Tesla.
All right. It's a good
And,
good
and it's theoretical. Brandon is not taking these trades. If he does, he'll mention, I'm sure. But I'm just throwing out theoreticals there. Viewers looking to set people up.
All right, so we'll call it a little safety check down
Yeah,
pass to Saquon
fair.
Barkley.
There you go.
Um,
We'll keep it the football parlance since it is Super Bowl weekend.
so, um, I'd probably keep it as simple as a 380 put that expires on Friday. Yeah, again, if the market comes under pressure, Tesla making a 6 point move lower is a pretty conservative figure. And then from there, as we talked about many times, if it's working out, you adjust accordingly and you can roll it down. Now the 3 seconds to go and the spread's 6 and I don't want a touchdown, but they're gonna throw the Hail Mary. I think if you were to kind of play like a home run in this, you'd kind of have to be playing off the assumption that there's some sort of tariff headline that would be driving it, right? I mean, and if that really got going to the downside, it could, in theory, be solid. From there, assuming that the 373 was the low, you'd have to assume that it would at least go down towards that level and probably test it. And again, that wouldn't be that huge of a move for Tesla. I'd probably be looking at the 370s. As we've talked about, if I've kind of got my target in there and I think it's going to be a quick move, I'm going to go a little beyond that target just because in anticipation of that quick move, you're going to make more money, just being a little further out of the money.
All right, there you go. Another headline too. Just seeing one coming across, and I think this is inevitable. It might need to be until the House takes over, but um, I think you're going to see a lot more kickback on people going after Musk in terms of legally with what he's doing right now. And the only thing that had me thinking of that is there's a headline crossing right now that Judge Yvonne Gonzalez Rogers in California notes she wants Elon Musk to sit on the stand and testify at a hearing at federal court in the California case against OpenAI. Now, I don't think anything can really stem from that, but there is headline risk out there for Tesla, of course, right? I mean, that's how it got driven up all this way. So, some interesting bets there and trades from Brandon. So we'll keep an eye out on Tesla, Brandon. We'll keep an eye out on your commentary. But there is a few setups for anybody that's interested in playing that particular play. All right, Brandon. Let's switch gears here a little bit and start talking Constellation Brands, STZ. Now, this is a name that I've had on my radar because obviously hasn't been a great time for the beverage places. Kids these days are simply either not drinking as much or have a much more diversified drinking palate, uh, evidenced by Anheuser-Busch's drop and things like that. But you also have a lot of tariff concerns going on here. A lot of talk about Canada taking certain U.S. Liquors off the shelf. Talk about them going after just red states too, which was interesting enough. So like Kentucky, things along those lines. But bottom line, Constellation Brands has been a very weak chart, and this is one that you got on your radar, as we could see. It dipped down and puked a little bit on yesterday's headline. Now we're getting a bit of an inside day going on at the moment on the daily. So, what is it in Constellation Brands that you're seeing here?
Yeah, so just popped on the radar because of the all the tariff stuff, and yeah, I mean, again, part of the reason I'm a little bearish right now. Well, I was having my own glass of Pinot Noir this weekend. I decided to throw on the good old CBC, which I can't
As is
remember.
your want in Oregon, of course. The
Yes, of
Pinot.
course. I was reminded over the weekend that luckily my favorite is Oregon Pinot Noir, so I win tariffs.
Yeah, you don't have to worry about getting tariffed in your own state, right?
so
Hopefully.
so yeah, I mean, the Canadians are pretty angry right now. That was their commentary. I mean, they're going after our alcohol, and they're not happy from some of the interviews and commentary that I saw on the CBC over the weekend. So, I think like many other traders, just kind of what's in the tariff world, what can I throw on my radar? And yeah, Constellation, I mean, kind of what caught my attention from the chart perspective is you had going back to January 10th, had that real nice just shelf of support, and the tariff news just broke it down below that. So, in theory, when those things happen, you start to take another leg lower, and seems pretty reasonable to me. It's not super extended to the downside. You got that consolidation period, move lower. And then why I wanted to talk about it was I've been kind of watching it real time today because of that. And, they've been doing a pretty nice job of beating that thing down throughout most of the day. Just every time it kind of seems to want to make a move higher, the sellers just kind of kick in. And from a technical standpoint, if you're going to short something, that's obviously something that you want to see. So, that was kind of the main reason was, I know we've been looking for some tariff names and kind of interesting setup on the daily, and then just watching real time, the sellers definitely seem to be lurking out there on this name.
All right. Well, we'll keep an eye out on that. Let's do the same thing with this. Let's give me the screen pass to Saquon and the deep ball to Devontae Smith.
Is Devonte Smith because Is that who you're picking as a touchdown scorer this weekend? I might ride your
I,
coattails.
I figured he was the more likely deep threat between him and AJ Brown, I suppose.
So,
Just sticking with the football parlance, you know.
all right, perfect. One thing I would point out on the STZ option chain is it doesn't trade a ton of options. Some of the bid asks are pretty wide on it, so just make a note of that. So, probably similar to, kind of just the easy play. Well, I don't want to say easy. The safe play, kind of just going down to that 170 level. Again, you've got your round psychological numbers. 170 would probably be a pretty reasonable one in this case. And then, playing again, the assumption that some sort of tariff headline comes out. I would imagine that it would have a possibility to go back and test those lows from yesterday. So you're talking the 166 area. That would have me looking at the 165s. And again, that's kind of under the assumption that I go to bed tonight and I wake up and Trudeau and Trump had a falling out again, and no more liquors ever coming to Canada, kind of thing.
Yeah, well, let's all hope that's not the case, right?
I hope not.
All right, last thing we're going to talk about is in the white hot quantum computing space. Well, we'll call it volatile. It's not as hot as it had been at the end of the year, right? But let's talk a little bit about IONQ. Is that also fell on your radar? Just kind of looking at the daily, pretty interesting chart here, just with that walking up that 50-day moving average. So I'll be curious to hear what your take is on this.
Yeah, I was just kind of watching some of the high flyers today, and
And am I on the daily or the 5 minute here, Brandon?
actually, would you mind flipping over to the hourly?
Not at all.
Thank you.
If you need me to scrunch or expand, just let me know.
Okay, perfect. So, yeah, I threw this out there this morning, and kind of the first hourly candle, you were starting to get a bearish shooting star candle, and ended up being on quite a bit more volume than the last hourly candle. And, I've talked about it. Anytime you see those reversals, you usually want to see it on a high volume. So, you just kind of saw it pulling back in a little bit, had the technical pattern, and yeah, ended up kind of forming a not so textbook double top before seeing a pretty nice little breakdown sitting right at the lows of the day. So, again, showing a little bit of weakness there as the market sees an okay day. And then kind of what also caught my attention and why I wanted to talk about it, if we flip back now to the daily, you've got a pretty textbook shooting star candle forming right there. So, we got 2 hours to go. Very much subject to change, but again, those are just kind of some of the things that get something on my radar. You've got the intraday pattern, and then it turns into a full day pattern, and I do like seeing the potential weakness, versus the overall market as it sits near the lows of the day.
All right, let's we'll go one more time here. Screen pass, deep pass.
All right,
And and
so
and, and I guess the important topic here too is I'm assuming that there's got to be a pretty wide difference in the pricing of these options between Tesla to Constellation to IONQ.
yeah, I mean, INOQ is definitely kind of your high implied volatility trader, that's for sure. I mean, Tesla, because of all the things going on, Tesla's certainly not cheap these days either. And then, yeah, your STZ is elevated because of the tariff stuff. Actually, that's actually close to almost the highs, current IV percentile 87%. So those aren't cheap, but definitely cheaper than your INOQ, which is north of 100. So yeah, I mean the safe one here, I'd probably again just keep it simple. You got that 20-day moving average that's at like 39.42. So, I might keep it real simple and either do the 40 or the 39. again, something like this, a 2 point move can happen in a couple minutes. So usually I'd probably lean more towards the 39 level. Um, my home run would probably be assumption that it would blow right through all those moving averages below it and might go test the low from that wick on the 28th around 35.75. So, I'd probably go to the 35 level.
All right. So there you have it. A couple of ideas for the traders out there. Brandon, always appreciate that. Any other names before we move on that you wanted to mention?
No, I think that's good.
All right. Let's break into this week's topic, which we were talking a little bit about it last week. You saw the conversation in the chat room and seized upon it for a good topic, and I would agree. And that is the Calamos Protected Bitcoin ETFs. Obviously, Bitcoin been extremely volatile here, so why don't we break into these and talk a little bit about what they provide to traders and also some different ways of looking at and how to play them.
Yeah, so as you said, the Calamos Protected Bitcoin ETFs. So, um, for starters, for what this is worth on Calamos, I actually started my career in the mutual fund world, and I think my firm had about one good mutual fund, and it happened to be a convertible securities fund. And Calamos was always a big competitor. They were really the best in the space. I think they're still pretty highly regarded, but it's been many, many years for me since I worked in that space. But they got about a $40 billion in assets under management. Obviously in the finance world, bigger isn't always better, but I do like the fact that these are at least issued by a firm that has a long track record and some AUM. And the reason I say that is just some of the ETFs that we've talked about here. You got 10 shares traded a day by some issuer that's 3 hours old. That's just carries a whole nother bag of risk with it. So um, yeah, so there are three choices here. Ticker symbol CBOJ, offering 100% downside protection. CBXJ, which offers 90%, and CBTJ, which offers 80%. So CBOJ actually just launched on the 22nd, and coincidentally, didn't even plan this. The other two actually just launched today. So if you're pulling those up, you're probably seeing
Yeah.
quite a bit of just chop.
Right. So, well, right now I got the CB. Which one do I have up there? CBOJ on the 60-minute chart for starters.
Yeah, so they're pretty thinly traded in general, and then obviously ones that just launched today. I mean, they look like a penny stock, really, if you look at the chart. So just kind of keep that in mind as we go through this. Um, so so what these are designed to match the positive price return of spot Bitcoin up to a defined cap while protecting against either 100, 90, or 80% of losses over a 1 year period. So they list these updated cap rates and cap ranges, which essentially is your limit on the possible return at the end of a target outcome period. So, you know, the less days that are left within this outcome period, the lower your cap goes. So, for perspective, CBOJ, which again offers the 100% downside protection and has, I don't know what, 2 weeks under its trading belt, that's sitting around 11.5% on the cap. And then if you buy in on day one, which they kind of recommend without saying recommend, I guess, to protect themselves, is you get the 100% protection if you buy in on day one. So
So,
kind
so You would have only gotten the CBOJ 100% protection if you bought last Wednesday.
That's correct. So technically speaking, you would have to get in on a certain date in order to get that 100% protection. And after that, it can technically vary. So you'll still get the protection, and they actually update it on their website on a weekly basis of what these protection levels and cap rates are. So for going back to what you asked, the 100%, basically, I think they have to present it that way, just legally speaking, because if you go into this ETF technically one day later and the pricing has changed, then you could technically get 99.5%. So, from a fact, we'll call it a fact sheet perspective and just a legality standpoint, they have to say on day one in order to get the 100% protection. It's kind of a heck of a marketing tool if you're
Yeah,
an
well,
ETF sales guy.
I guess that's the thing. Like you're telling me that there's 100% downside protection, 90% one, and an 80% one. Doesn't seem like any of them are 100% downside protection, though, right? Unless you figured this out on Wednesday when it was coming out.
I mean, it's basically like, and I'm not recommending this whatsoever, but it's basically like unless you get off of the options playbook with Gavin and Brandon this afternoon and you go and buy one of these new ones, then you're not guaranteed the 100%. You're correct.
That doesn't even seem like it could be legal. I mean, that's kind of like offering up. If I said briefing will give you 300% returns, and then all of a sudden you signed up and you're like, well, maybe it's only 290% at this point because if you signed up yesterday, it was 300%, right?
Yeah. So
It seems like the marketing, like the SEC's got to have a field day with this. Maybe they figure Gensler's out of the shop and they could get away with it. I guess.
I mean, it's the free for all on Wall Street now with him gone, I guess. So, but
Yeah.
you kind of like I had said before. I mean, the protection levels are going to go down, but looking at CBOJ, I'm on their current last weekly printout. The protection level is 99.79%. So, again, very very high, but not technically 100. And again, I think it's part of just kind of protecting themselves legally speaking, because I would say a smart lawyer that had a client that wanted to spend some time in court, you could probably make some arguments. Oh well, I bought it in the morning. I only got 99.7 versus 99.8. And that's how finance
Why does
works.
that continue to recede down their protection? It's got to be. I mean, is there just deteriorating returns as you go along, and that's why the protection goes down? Or
Um,
and if I'm getting put in the cart in front of the horse, and you're going to get to that, just you can tell me.
no, I'm not. I feel like I need to pull a card from Powell right now in his press conferences and just say, I'm not going to discuss that because I
That's
don't
fine.
I don't know for sure.
That's totally fine. That's totally fine.
I loved him in that press conference doing that. So,
Yeah.
again, I think it just has to do with, yes, a little bit of the fact that you are involving options. So there's going to be just the typical changes in prices. You're even going to, because it's a ETF, you'll have some fluctuations between, the share price and the underlying NAV. Yeah, you've got decay that's going to come into play. So, they've got some ones on the protected equity ETFs, and I'm looking here at their list here real quick. I mean, the protection level, the lowest that I see one going down is like the 92 and a half level, and that's been around since May. So, again, it's a pretty high protection level, but I think just kind of normal market forces take a little bit away from that buffer over time. And, maybe there's a fix to that down the road, but I think that's kind of why they're trying to get you to think of it as, almost like a 1 year note in a way, right?
Yeah.
So
So is it leaps that they're using then?
they're primarily focused on flex options, and they'd be going out. So, like the CBOJ, for example, the options that they own expire in January 26. So, yeah, yeah, you'd have about a leap there with the assumption that it was written with 1 year's time. I don't know the exact date that they wrote them. I could probably find it, but yes, you'd be looking at basically exactly a 1 year leap. And they use the flex options when available, they said.
Okay. Um, yeah. So who's buying this, Brandon? I guess would be the question. Just if you own Bitcoin, you'd want to have this as a hedge.
I think it's more, yeah, again, I not being the sales guy behind it, I'm going to speculate a little bit here. I think it's more people that want some Bitcoin exposure but are very nervous about the swings. If let's say you had a
Might want to find a different asset class if you're worried about volatility, right?
yeah, I mean that's kind of my closing statement, to be honest with you. But you're right. Um, yeah, I mean the way that I would look at it is you've probably got some sort of, and again, you'll get retail that just pops in because they see something like this. But, if you're a financial advisor and you use the Calamos convertible securities mutual fund, they've got a great track record, and, you get pitched it by your Calamos wholesaler, and you sit down with your retiree clients that want the Bitcoin exposure, but they just don't want the total risk involved. I mean, it's kind of a way to, put a 2-3% slug of somebody's portfolio into it, and you can say you've got them their Bitcoin exposure. That's my thought.
Yeah. Okay. Um, so what's the broad difference? I get the protection. How are they different protections then? Is it just different strike prices that they're buying here for the different assets or what?
Yes. So how does this work basically is you buy a deep in the money call. This gives you your equity exposure. You buy an at the money put. This is your downside buffer. And then you sell an out of the money call, and this funds the downside buffer. So yeah, you could just adjust those options accordingly to give the different protections essentially. So I want to give a quote here from one of the Calamos employees that I found that created these, and he was talking about the S&P version at the launch of them. So this is from a couple years ago, a quote I found. They all work together. It's a fully funded options package that delivers the upside of the S&P 500 to a cap with 100% capital protection over a 365-day outcome period. Then at the end of the year, the options reset, they stay in the ETF, and they keep going. So the structure that I just provided on, the which calls and puts that you're buying and selling, along with his commentary, they have all this stuff on their website. But for full disclosure, after reading this quote and going through a whole page on their website about the structure of this, I then went to the holdings of CBOJ, and I could only find a long call and a short call option that both expire in January 26, as I had just mentioned, and they were on the CBOE Mini Bitcoin US ETF Index. So why there wasn't a third leg on the options, I honestly, not being a Calamos employee, and I haven't had a time to give them a phone call, I don't know. But again, just it's all over their website that this is how they work. But I could only find the two holdings in that particular ETF, just in case anybody goes searching and you find that anomaly too.
Yeah. Okay. Um, so let me ask you, Brandon. Do you have a preference of any of the three? I mean,
If I were to do them,
yeah.
I'd want the 80% one, just because, again, the more protection that you have, the less upside that you're going to have. And, I'm if I'm going to invest in Bitcoin, it's because I want upside. That's just how I'm personally going to think about it.
Right. So I'm just kind of looking to see how much they track each other here. Just looking at Bitcoin versus CBOJ, uh, going back to last week. And I don't know, the CBOJ just kind of seems like it has continued diminishing returns. No, just kind of like the other ones don't have enough trading history to really take anything from. And obviously, with that big gap down here in Bitcoin futures on from Sunday night, um, and then it just kind of bounced back. But looking at the CBOJ, uh, I see that one little dip on Tuesday morning, which would have been beforehand, but not a lot of, I don't know, doesn't seem to really track it all that particularly well one way or the other, right?
Yeah, I mean,
I mean,
again, with that,
this thing's moved 20 cents over that time frame. I see that one tail down to 24.94, but yeah, you're not selling me on buying any of these things. I gotta say at the moment.
well, you literally you've taken my whole closing paragraph throughout this
I'm sorry,
segment.
man.
Come on.
Okay, no, fair enough. I'm sorry. I'm just kind of just our discussion has me kind of laughing about the setup here, to be honest. But especially for something like Bitcoin. But I'm sorry. I don't mean to
No,
bury the lead on you here, Brandon.
no,
So go
um,
on.
I I will not lose any sleep tonight, trust me. So, no, I mean, you're right. In something like this that's kind of a newer concept. I mean, going back to their equity ETFs, their oldest one is the one that I mentioned earlier that started in May.
Yeah, what's the
Yeah.
ticker symbol for that?
Where did that just go? One second here. CPSM.
Okay, so what were they doing with the CPSM? Did you get a chance to look into that in terms of how they were achieving this? That might make a little bit more clarity, right?
So this is on their S&P 500 series. So I didn't do a deep dive on that one in particular, but my just assumption is with the structure, with the options that I just went through, that they're probably using some sort of, an SPY or, some sort of S&P, mini futures, some options on that, something along those lines with basically the same replication. That would
Are
be
they
my
playing are they paying any distribution yields on these?
On this weekly rate sheet that I'm on, I don't see any. You would
What's the
no, no, I wouldn't think you would just because of the fact of how they're structured options wise, because you'd have to be generating the income in theory by doing some strategy like a covered call type strategy to pay out that income, and they're not doing that here. As I
what's the expense ratio for it?
Yeah, the expense ratio for CBOJ was 0.69%.
Is that across the board for the three? I know
I
the
didn't,
other two started trading, so maybe they don't have them up yet.
yeah, I didn't see those when I quickly ran through it. But I do believe they're all probably pretty similar. I mean, they're all really just the same exact strategy. So if they were charging more for one than the other, it would kind of be a little odd.
Yeah. Okay.
Yeah,
Yeah.
so I mean, these are the type of thing, kind of as we were just looking at the chart. I mean, maybe not a whole lot that's going to get you excited there, and this is something that I would like to watch, but then at the same time, it's like, well, if I watch it too long, then I don't get my downside protection. So,
Yeah. Yeah. Okay. What are some of the other aspects of these protection ETFs that caught your attention, Brandon?
um, to be totally honest with you, nothing.
Yeah, no, and that's fair because I mean that was the discussion. Do we want anything to do with them? And Doesn't sound. I- They sound like they could be more beneficial for a large money market fund, perhaps that's looking just to own some Bitcoin and looking for some sort of protection against it. But it just doesn't feel to me like it really offers a ton of protection outside of it. I mean, I'm just looking at the returns from the S&P one. I mean, I feel like I would be better off just having money in a money market fund. I mean, what's your thoughts on that?
Yeah, I mean, I agree. I think it's just, I guess in a way, if you don't want to do the swings of Bitcoin, then just maybe, I don't know, find, I don't know, some mutual fund or like just just buy the IBIT or something instead of trading the futures or options on it. Yeah, again, it's a very just kind of slow and steady. I mean, they barely trade in the shares. The CBOJ just traded 100,000 yesterday. So, you're going to end up in a case, I think, especially with Bitcoin, where you wake up and it's like, new sovereign wealth funds dedicating $1 trillion to Bitcoin and it goes up 20% and you're going to be up 20 cents, like you
Yeah.
just said. So, again, I think it's if you just really want the exposure, but you're just really scared of the risk of Bitcoin. And, personally, if that was the case, then I'd maybe could make the argument that you just stay away from it altogether, right? If an asset class or an investment's going to keep you up at night, then, you know, maybe look elsewhere.
Yeah, I would agree with that. So
Yeah, and for me, I personally, if I wanted something like this, I'd just go and do it on my own.
yeah,
Just plain and simple. I would be able to control the options. I could adjust accordingly. I could take off legs. I could open legs. Again, it's just like having any sort of options trade out there that you can adjust accordingly. So, yeah.
let me ask you that then, Brandon. Not to throw you in your spot. I'm not looking for exact levels at all. I mean, we could just use hypothetical levels at this juncture. But looking Bitcoin, I got it right around the continuous, right around that 100,560 area at the moment. How would you look to play that 100% protection? Like, what are some areas that you would look at? Just the general themes, not looking for exact numbers here.
Um, yeah, I mean that one's it's honestly kind of hard for me to answer because my brain just goes to like, well, let's buy some, puts or calls on
Right. Yeah.
something rather than
Keep it simple rather than going for an ultra structured protection. Right.
yeah, I mean that's just kind of how I look at it. I don't know for what my 2 cents is worth, and I might not make many friends with the crypto bulls here, but I'm kind of keeping an eye on that 91,000 level. And I was looking over the weekend. There's a nice gap to fill on that thing from November that I don't know. I don't think the government's going to go and buy much of this stuff unless they crash the price first. Right? That's my opinion. I think
Yeah.
I just institutions tend to want to buy low and sell. I mean, we all want to buy low and sell high, but they tend to not buy things at the top as much. And I think it takes one simple tweet that we want to buy Bitcoin, but it's too high, and then they step in and buy it at a much lower level. So that's maybe my conspiracy theory slash thoughts on the chart.
It's an interesting theory, right? Because if all these governments are looking to buy it, you would think that they'd be trying to shake people out somehow here.
It takes one social media post from Trump. That's it.
Yep.
That's all it takes. So, and would it be legal? Probably questionable, but it's going to happen, and nothing will happen to him, and nothing will happen to market makers or whoever. So, it's one tweet for me. So,
Yeah.
um,
I'd agree with that.
and again, we've kind of got one of those tails at the bottom here from the last couple days when people stepped in after the tariff announcement. So again, you've got some fresh longs there, and if you start to eat that tail, and you got that 91,000 level that's been tested quite a few times. I think that would quickly open the floodgates to that gap down or gap up, excuse me.
Yeah. Okay.
So yeah, I mean, sorry if wasn't the most exciting idea. I think I can hear you scratching your head from the Carolinas up here, but it came up in the chat room, and I was talking with Damon about it as well, and it's options based, and they're new ideas. I mean, these whole protected or buffer ETFs. I haven't done a deep dive on the whole ETF world, but they seem to kind of be the next hot thing, the next hot topic that they're kind of pushing out there. I could be off on that. Again, I don't work in the ETF world anymore, so I guess it'd be kind of interesting to see kind of how some of them play out. And again, if you were getting really, really nervous and like you said, maybe you wanted to just pull a little slug out of the money market account and have some exposure, it might be a place to look. But again, it's not the Bitcoin trade I would personally take.
All right, and there you have it, and that's good information, Brandon. I appreciate you putting this together. And not all of them are going to bear fruit, right? But it's always good to shake the trees at least and see what's out there. So, again, if anybody's got any further questions on these, feel free to throw them in the room. Brandon is in there, and I know some of our other users have also played around with these things as well. I think Damon might be taking a look at them too. So we'll help you out where we can. But this is definitely a lot of great information for us, Brandon, and good starting point for anybody that was looking at these as potential protection against their Bitcoin holdings.
Yeah, so I mean, if anybody, like you said, if anybody takes a deeper dive or sees that these are the greatest things since sliced bread, and I'm missing something, definitely would love to hear about it.
Yeah, exactly. All right. Well, with that, Brandon, then anything else before we let you get going?
No, I think that about covers it for now, and I'll go work on some more bad football analogies for next week.
No prop bets for us.
Oh,
Kelsey
how much
touchdown.
time do we have?
Kelsey anytime touchdown. All right. Well, with that then, Brandon, we'll let you get going on your side. We will be posting this, and I'll post the Carmine piece too. I was unable to do it yesterday, but I think I'll be able to post it today. I did post it in the room, but Brandon, thank you very much for taking the time with us, providing the trading ideas on Tesla, IONQ, and Constellation, and some insight into these Calamos protection ETFs.
Thanks, Gavin. I appreciate it.
Okay, take care.
You too.
All right.